on Pokarna, the granite major reported a muted set of Q4 numbers, and even FY24 was quite muted for the company. EBITDA margin and PAT came under pressure, but the commentary for FY25 is quite encouraging. To discuss this and more, we have Paras Kumar Jain, the CEO of Pokarna Engineered Stone, which is a subsidiary of the company, with us. Good afternoon, Paras. How are you doing? The first question for you is FY24 seems to have been a difficult year for the company. You've also gone ahead and hived off one particular segment of your business. So give us a quick highlight of how FY24 panned out, and why did you decide to do away with that particular segment?
Thank you for having me on the show. So for FY24, if you look at our numbers, on the revenue side, we did 688 crores versus 725 crores of the last year. However, the EBITDA margin actually on a full year basis increased 22% from 181 crores to 221 crores. Similarly, our PAT margins also actually increased from 66 crores to 87 crores, which is about 33% jump. Primarily, our market for engineered stone products is America. In America, due to the economic headwinds and the related demand conditions, the markets in last 3 quarters have been relatively subdued for us. But for FY25, we see the markets to be very optimistic and promising. And in line with our strategy of introducing new design and innovation-driven products, we feel that FY25 would be more promising than FY24. Now, coming to your other question on the apparel division of Pokarna Limited, which was hived off. So March 24, board took a decision to discontinue the operation of this business because we feel that our current energies and the way we are currently organized, our energies are more focused on our stone side of business, which is granite and engineered stone. So we decided to actually discontinue the operations of apparel division.
So two-part question here on that. Paras, you said that you are optimistic about FY25. So let's put that optimism into numbers. What's the kind of revenue growth that you target in FY25? You've done margins of almost 30% in FY24. Does that sustain? The second part, since you spoke about the apparel division, are you going to sell it off? What are the assets there? What is the monetizable value of, the business that you've discontinued?
So we believe that the margins, what we have reported on the consolidated basis for the year, will definitely improve over those margins. In our quartz business, our guidance has been that we'll always maintain an EBITDA of 30 to 35%. And we think that we'll be able to maintain that as well going forward. So we expect that the revenues also will grow in line with that. May not necessarily be 30%, but definitely the focus currently is on the bottom line. So we expect the bottom line to be stronger than what we have reported in the last financial year. So the apparel business, typically, we have largely is land and building. So we are looking at how we can redeploy those assets for our other businesses. And the current assets are relatively less there. So we are not really too much into the current assets there, because over a period of time, we have been scaling down that business and brought it to a level that we can actually close it down in a very smooth way.
So there is no monetizable value from that, and also no debt that goes away or anything of that sort, right?
So actually, apparel division is almost debt-free at this time. So we don't have much challenges out on the debt side for the apparel business as well.
Okay. Paras, now let's come to the export market. What we understand is, please correct us if we are wrong, almost 90% of your exports are going to the US market. While you have said that, you expect FY25 to be slightly better, you've also mentioned that, you expect demand headwinds across the US market still. So FY25, in terms of export revenue, what will be the contribution of US? Do you expect it to grow this year? And which are the other countries that come into the picture FY25 onwards?
So US has been traditionally our primary market. Over 90% of product goes to US. And we believe that US will continue to be one of the largest markets for FY25 as well. We've made inroads into certain markets like Canada, Mexico, France, Russia. And we believe that these markets like last year also have performed better. And we expect that as the markets, the full cycle of marketing and product establishment happens in those markets, our contribution from the new geographies will also increase, while the America will continue to be our prominent and important market.
So you're talking about two new technologies, Krios and Chromia. Can you quantify, what you'd be able to deliver on the top line in terms of exports, with these two incremental products coming on stream?
So actually, I can give some brief about the product technology right now. So one is that Chromia is a high definition printing technology. So either to the quartz, unlike porcelain or glaze tiles, could not be printed. So now you can actually ornamentally decorate the quartz full body with certain high definition printing. So we are bringing in this new technology from Breton of Italy that is going to be commercialized by end of FY25. Currently, that's what we foresee. And Krios is a new mixed distribution and extrusion system, which Breton has introduced to make ultra thin slabs, make slabs with more exotic and unique patterns, which we have not seen before in the quartz industry. So these two technologies will help us to increase our value realization. They may not necessarily contribute to the volumes because these are more ornamental and design driven. So I think R&D is currently in progress. So I will not be able to give you exact number as to how incremental we are expecting, but we are expecting that these two technologies will also help us to get a higher realization on products.
Could you give us a sense of, the Krios line, which you said will be commercialized in the second quarter of this year. Chromia will be in the fourth quarter of FY25, that is. So this will obviously be a story more of FY26. How much incremental can you get from over and above what you're doing right now from these two particular products?
See, basically, Chromia would be, as you said, commercialized in the Q2 of FY25. And with the R&Ds and all, we expect that another quarter or so would go in getting the plant trial R&Ds done. So we expect around 10% contribution from Krios product in a 12 months period. So it would be too early to really look at contribution largely coming from Krios and Chromia this year. So this year our focus would be actually getting the contribution from our existing technologies, what we have, and the new customer bases what we are adding and the new geographies where we are reaching. So I think, as you said, FY26 is where Krios and Chromia would typically contribute larger to our line.
So you said FY25 you will focus on revenue. It won't obviously be 30%. So what should a reasonable estimate be? 20-25% or 25-30%?
So I think we would say between 15 to 25% is what we have internally set as our target. And depending upon how the markets pan out and the headwinds pan out in the US, these numbers can be in that range.
Thank you so much for your time, Mr. Paras. The market clearly likes what you're saying. And also, the market seems to realize that FY25 is going to be better than FY24 for you. We wish you all the best. But that's all the time we have with you. For Q4, we'll bring you once again for the first quarter of FY25. Now, moving ahead, we'll take a quick break. We'll get you more on the markets and put focus on restaurants brand Asia and Dixon Technologies on the other side. Stay tuned.